looking at the 401ks and the 529s and your pensions. And if you think you're alone as you look at your investments over the last year and the toll they took, well, you're not. Some of the guys who actually get paid to outsmart you did not. Turns out 2018 was the worst year for hedge funds since the financial crisis. Just look at some of these losses. David Einhorn, he runs Greenlight Capital. He saw a decline of 34% in 2018. That's his worst performance in the 22-year history he's been running it. And while we're still waiting on final numbers for the year over at Pershing, December 24th, Bill Ackman's Pershing Square seeing losses of 9.3%. So here's the question. How do we all make 2019 a year of many happier returns? To our traders who you guys made some great calls
Jen,
in 2018. Thank you. I want to say Happy New Year, guys. Alan,
Happy New Year.
Thank you. Let me start with you. Clearly, December caused some serious portfolio rot that even the smart money didn't see coming. But what should people do? What are you going to do differently this year?
Well, first thing, let's remember that December we essentially gave back gains. Yes, we were down for the year, but a modest back off. If you look at it, it's about, 5% in the S&P for the year. So those were gains given back. The sentiment has shifted a little bit. You're seeing people buying dips now. We've seen that key reversal in the market, whereas last week we made those new lows and had a higher weekly close. So that's very much a positive. I think the hedge fund guys can sometimes get stubborn because they have so much money to work with that they think they can ride through ups and downs. You have to have discipline. It doesn't matter your account size, your experience. Use stops, use options as protection. And if you're wrong, take a loss. Put your money to the side and look for a new opportunity.
Yeah, I mean, if what we think is really happening, that there is a lot of machine trading going on, Scott, wouldn't you then be more interested in putting in stop losses? And we all can't sit there and watch our portfolios every 5 seconds. So make sure you have a little bit of insurance put in there.
No, you're absolutely right, Liz. And, this is a different environment than it has been over the last 7, 8, 9 years. So these big hedge funds, they're going to outperform when the market's doing well, and they're going to underperform when we have an off year like we just had. But much to what Alan just said, you do have to use stops. And I really, truly believe that in this type of trading environment, whether you are a longer-term investor or a day trader, you have to keep things closer to the vest. Take those losses quicker than you normally would, and take some profits quicker than you normally would. Until we see volatility start to come out of the marketplace, while we're getting these 500 and 1,000-point daily swings in the marketplace, you have to adjust your trading style. And again, to what Alan said, you can't be, let's say, staying
stubborn
on one position and just hope. Thank you. Stubborn is the word. That's exactly what I was looking for. You can't be stubborn in this marketplace because you know what? The market's always going to win.
Well, we're heading back down to session lows, and Tim Anderson, give me your thought, because there's the buy and the hold for the long term. Let me give you a personal example. I've got a 529 for my 17-year-old daughter. It was looking really good around mid-year, and then now I don't even want to look at it because I'm nervous. Hopefully it's one of those that transitions into more protected investments like treasuries, but even treasury world is difficult.
There's certainly been plenty of volatility in the treasury world, and even if you look at today, the utility stocks are having a particularly brutal day today, despite the fact that yields are going down and bonds are rallying a little bit. I certainly agree with what both of your earlier guests said, and that goes hand in hand with being very skeptical of the consensus view. Look at where we started 2018. Mm-hmm. Everybody was extremely positive. There was a lot of exuberance on the market. People, after a very strong 2017, people were universally positive on the market. That lasted for about a month.
Guys, I want to
this year it seems like we have an excess of caution and maybe even too much pessimism.
Before we end, and I need to ask you this because the president just said a few minutes ago that December, which was the worst in decades for trading, was a, quote, little glitch. Do you agree, Scott?
No. I don't agree with what he said. Yeah, maybe it was a little glitch, but we've got to take politics out of the marketplace right now. And obviously, he is playing to his agenda, as any president would. So this is not a Trump thing. This is, you have to just go with what's happening in the marketplace right now, not make excuses and trade appropriately around it.
Yeah, Alan, quickly.
unless you think it's different this time, which I don't think it is, the market's been on an upward trajectory. Let's look at from the lows in 2009. We're up 170% in the S&P, so that's 17% a year, and that's even after not performing last year. So slow and steady, I don't think anything's changed.
Yeah, you know what? In 10 years, we'll say, boy, that was a buying opportunity. Guys, I've got to run. Thank you, because we need to get to Washington, D.C.